Something strange is happening in Europe's largest economy. If you look at the news, Germany is the sick man of Europe. The government just slashed growth forecasts to a measly 1%. Factory orders are shaky, and the IFO business climate is stuck in the mud. But then, you look at the stock market. Earlier this month, the DAX 40 didn't just grow, it exploded, smashing past 25,000 points to a historic all-time high. How can a country be in crisis while its stock market is in a gold rush? Today, we're deconstructing the German paradox and why the DAX 25K might be the most misunderstood signal in finance. The sick man reality. Let's look at the ground floor first. On January 28, 2026, the German government officially admitted that the recovery is slower than they hoped. We're dealing with high energy costs, a massive labor shortage, and a global trade war that feels like it's just one tweet away from a meltdown. The IFO index, essentially the vibe check for German CEOs, is at 87.6. That is not a party number, that is a batten down the hatches number. The secret of the DAX. So why is the DAX at 25,000? Here's the secret. The DAX is not Germany. Almost 80% of the revenue from DAX companies comes from outside of Germany. When you buy the DAX, you aren't betting on a bakery in Berlin or a startup in Hamburg. You are betting on global giants like SAP, Siemens, and Rheinmetall. While the local German economy struggles with bureaucracy, these companies are feasting on global trends. Defense stocks are hitting record highs because of European rearmament. SAP is soaring because of the AI-driven software boom. These companies are global predators. They don't care if German GDP is 1% or 0% as long as the rest of the world is buying. The superfuel fiscal stimulus. There's one more reason for this rally. The German pace. After years of holding back, the government has finally unleashed a €500 billion infrastructure fund. For investors, this is superfuel. It's a promise of guaranteed contracts for years to come in construction, green tech, and digitalization. Even if the economy feels slow to you and me, the money is starting to flow to the big players. Conclusion and call to action. Is this a bubble? Or is the DAX finally priced for a global future? The gap between the street and the exchange has never been wider. While the DAX at 25,000 looks like a celebration, it's actually a sign of a K-shaped recovery, where the giants pull away and the local economy gets left behind. So, are you betting on the German giant or staying away from the German struggle? Let me know in the comments.